This is the Asia Trade. I'm Shery in Tokyo.
And I'm Annabelle, Droulers in Hong Kong. The top stories this hour. Trump says he and Putin will meet again in 2 weeks or so. Those comments coming a day before the president's meeting with Ukraine's leader. Asian markets get red signals from Wall Street as bad loans at 2 U.S. regional banks fuel credit concerns. As U.S.-China trade tensions rise, the IMF urges calm. But can business carry on as usual? We hear from the managing director. Plus, TSMC and ASML earnings show AI spending is still going strong, even as bubble fears grow.
Take a look at how Australia is coming online after closing at a record high. We had those expectations of rate cuts rising in Australia as we saw the unemployment rate jumping. In fact, we do have the jobless rate when it comes to South Korea coming in at 2.5% below economists' expectations, also adding 312,000 jobs in the month of September. And all of this coming with those government support programs where we've seen more jobs being made in certain sectors of that economy. That market has been on a tear. Same with Japan, where we actually saw a little bit of a rebound in the previous session on the easing political concerns. You can see Chicago Nikkei futures, though, to the downside of 0.2%, as we had the Japanese yen a little bit stronger in the overnight session. But of course, despite the rally that we've seen in Asia, we're talking about the broad Asian rally, the biggest two-day gain since April. We continue to watch for potential concerns around those regional lenders in the U.S. Creating some concerns around the credit markets.
Yeah, absolutely. You think about, we had the comments from Jamie Dimon earlier this week about cockroaches, and certainly there are concerns about credit risk generally for the economy. But overnight, as you said, we had 2 regional lenders disclosing problems with loans involving allegations of fraud. The amount is not considered to be overly significant, but still it could be enough, again, to send these jitters back through, because you saw in the session overnight, for instance, the volatility index closing above 25. We haven't seen it above 25 going back to April of this year, and lots of fluctuations throughout the session as well. Eventually, you can see U.S. stocks closing to the downside, as did, you can see that big drag there from the overall banks index. Volatility, of course, playing out into Treasury yields as well. We saw that 10-year yield dropping below 4%. The 2-year yield as well hitting the lowest we've got going back to 2022. And investors continue to like the safe havens, like gold, for instance, still staying bid.
Yeah, let's actually discuss all of this with MLife strategist Mark Cranfield, who joins me in the Tokyo studio today. So always great to see you here in Japan. We have seen these risk indicators flaring up, as this chart on the Bloomberg shows, especially with the VIX spiking in the overnight session. How concerning are these regional lender problems, especially at a time when there's a lot of talk about being overstretched in the U.S. markets?
Well, the place where the alarm bells will be going off is because of the link between these regional lenders and private equity. And people have been concerned for some time. It's a bit of a black box. What's in this private equity pool? And there's this academic report out talking about mark to myth. Now, if you go back to 2008, when we had the subprime crisis, this was the alarm bell sound when people were talking about the way that banks, hedge funds, and other people were essentially making up some of their valuations, and they're leveraging heavily. The valuation's not real, and that brought the whole pack of cards down. If that's something like that going on again this time in an even more difficult space to understand, private credit by definition is much more difficult for people to see inside what's going on there. Now, if people start to fear that valuations are not true in that sector, it's huge. It's trillions of dollars. That will set alarm bells across the rest of the investing space. And what we've seen so far is a relatively modest sell-off in US equities. It could certainly get more serious if people think that there's no end to this kind of thing, and particularly considering we're already in the 4th quarter of the year. People obviously want to book some of the great returns they've had this year. Things could get pretty spicy.
It's interesting, Mark, though, because, yeah, we had the big bank numbers this week and they were pretty solid. But also I'm wondering rather about your views on the AI space, because we had Oracle margins overnight, TSMC, ASML earnings this week. At least at that end, it seems to be holding up. So is that going to be enough to offset those risks you were just talking about?
Well, the outlooks are the key, and they've been very positive. We look at TSMC, ASML, and we'll probably get very good outlooks from the other big people. If you look at what's happened with Honhai earlier, as the the signs for people like NVIDIA, which is the key, obviously. NVIDIA doesn't report for a few weeks, but they obviously will be the big one for markets in terms of what do they see for 2026. All of that so far sounds very optimistic. Now, but at some stage, there will be a tie-up between what we're hearing about in the private credit space and in the tech space as well. Now, so much has been invested in AI, so much of the valuation is on what's going to happen in the future. Well, when you have so much tied up, as you do in the gold price as well, when things start to turn pear-shaped, it will just be a question of trying to get profits out wherever you can. So if we see that US equities start to weaken because of risks in the regional banking sector and fears about private credit, that will spread to gold and it will spread to AI as well. Nobody will escape this.
And gold also rising on expectations of Fed rate cuts at the moment. And I almost forgot that the U.S. government shutdown is still ongoing. And then I realized we're not getting those inflation numbers. How is the Fed really going to maneuver in this environment?
Well, you can hear from recent Fed speakers that they are very concerned about the employment situation already. It's not getting any better. As you say, the longer the shutdown goes on and the threat of government workers being laid off, even without the data, they can tell for themselves that this is not a pretty picture, and that's why the Treasury yield curve is steepening, but steepening with the short end going down more, yields going down more quickly than in the long end. 2-year Treasury yields are the lowest of the year. That's helping to drag down the US dollar as well. You can see the knock-on effects throughout this. The market is now pricing for 100 basis points of Fed interest rate cuts going into next year. That's not really too surprising considering they don't have much data to work on. The sound bites they're getting from the Federal Reserve are negative. Put that all together and people want to be defensive. If we do get a bit more concern about what's happening in the equity space as well, Treasury yields could tumble even further. It's starting to look like one of those snowball effects where one asset just feeds into another.
That was our Bloomberg M-Live strategist, Mark Cranfield, there in Tokyo. And moving to China now, because Commerce Minister Wang Yi is doubling down, blaming the latest flare-up in trade tensions on the U.S. actions after the most recent round of talks. Let's bring in our China correspondent, Min Lo. So, Min, we also heard from the Foreign Minister Wang Yi, but are these two singing from the same hymn book right now?
Well, a little bit different, but also I guess the combined messages is that China wants the U.S. to really roll back some of the unilateral actions that the U.S. has taken so far since the trade talks, because that was what Chinese Commerce Minister was talking about, how the U.S. is the one that is creating these new measures. And he is saying that this is seriously undermining the atmosphere for ongoing trade negotiations. Meanwhile, the Foreign Minister Wang Yi is taking a more conciliatory tone, saying that both sides should continue to maintain dialogue to resolve their differences. He says that decoupling is not a realistic or rational option. So yes, there is room for negotiation, but once again, China is laying the blame at the US and wanting the US to perhaps be the first to remove some of these additional measures or to provide concessions to China before they might be willing to meet each other halfway.
The IMF also warning of a potential trade war. What is MD Kristalina Georgieva saying exactly?
She is calling on nations to remain calm, and she says that yes, there might be this temptation to also come up with your own protectionist measures, but that has the risk of causing this trade war to shift from one part of the world to another part of the world. Have a listen to what she said.
Recipients of Chinese goods feel the heat and decide that they too should impose tariffs. We may still have the risk of a trade war moving from one place to another. So our message to everybody is be calm, and to China, be careful. Do not provoke other countries to see you as a threat to their economies.
So she's saying do not provoke other countries. And this is coming as G7 finance chiefs are in Washington for the IMF meetings, and they are seeking a joint response potentially to the rare earth export controls from China. But again, we keep hearing this from China, not just from the official circles, but also from Chinese experts that are being quoted in the media as well, oftentimes from universities that have very close ties with the government. And they're saying that these export controls, they are not a ban, and yes, it applies to the whole world. But again, for those countries that continue to work with China, especially if they do not join the US in these sanctions on Chinese companies, then China will be very willing to smooth the path and ensure the stable supply of rare earths for these countries.
Bloomberg's China correspondent Min Lo. President Trump says he would hold a second meeting with Russian President Vladimir Putin within 2 weeks or so. The comments came after the two spoke by phone ahead of Trump's Friday meeting with Ukraine's leader Volodymyr Zelensky.
And I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call.
Let's bring in Bloomberg's digital politics editor, Romy Varghese. Romy, is the president giving another chance to diplomacy here with Russian President Putin? And what does this mean for President Zelensky?
The stakes are even higher for Zelensky after this phone call between Trump and Putin. Before this phone call, Trump had expressed frustration. Putin had struck a warmer tone towards Zelensky, had even teased the idea of selling Ukraine Tomahawk missiles, which would strike deeper into Russian territory, which is something Ukraine really wants. And now the tone from Trump is quite different after this phone call. He seems willing to give diplomacy another chance, even though after the Alaska summit, Putin hasn't budged. He hasn't compromised. And for Zelensky, he really needs to impress upon Trump that the United States must remain on Ukraine's side, and that he's willing to make a deal with Trump, that he's willing to offer certain things, certain incentives, like, for instance, partnering with the United States on drone manufacturing, to make Trump remain on Ukraine's side, especially after this phone call.
You mentioned those Tomahawk missiles, and this is something that President Zelensky has been pushing for quite a while now. You also mentioned how Trump himself had indicated some willingness to sell them. But in light of this latest phone call, is there any chance that Trump will give them to Zelensky?
The likelihood now it's now even more clouded. It's even more uncertain. When he was asked about this today, Trump said about selling Ukraine missiles, or Tomahawk missiles, Trump said, well, we need them here in the United States. So that doesn't sound like someone raring to sell Ukraine missiles. But again, as we've all seen, Trump's tone can change depending on who he talks to. But he has, from today, indicated that he is willing to give diplomacy another chance and backing off some of the more aggressive steps he's been hinting at.
That was our Bloomberg digital politics editor, Romy Varghese there. And coming up on the Asia trade, we'll be hearing from the Hinrich Foundation unpacking shifting trade ties between the US and South Korea. Federated Hermes weighs in on market sentiment, and Counterpoint Research discusses the outlook for the chip industry and AI demand after TSMC raised its projection for revenue growth. So a lot more ahead. This is Bloomberg.
The Japanese yen continuing to strengthen for a fourth consecutive session, but still not being able to break that 150 line against the U.S. dollar. We heard from BOJ Governor Kazuo Ueda speaking in Washington, D.C., saying that the bank will continue tightening if confidence in achieving its economic outlook strengthens from here. You can see Nikkei futures at the moment pointing to a little bit of downside. This after we saw 2 sessions of gains for the Nikkei. We are continuing to see some eased political uncertainty. Japanese Japanese ruling party leader Sanae Takaichi's path to becoming Japan's first female prime minister, perhaps gaining a little bit of traction after progress in coalition talks with the Japan Innovation Party. Let's bring in Bloomberg's Sakura Murakami for the latest, and all of this after the coalition collapsed with Komeito. So do we have any more progress on the LDP actually being able to achieve this renewed feat?
So the prospects for Sanae Takaichi does look much better than it did last week. She's in talks with the Japan Innovation Party, which is a regional Osaka-based, smaller opposition party, and their alignment on fundamental issues like security and energy is much more closer than it is for example, the opposition parties, among the opposition parties. So there's alignment there. There are still a few sticking points, which is namely basically taxes, cutting the Ishin basically wanted to cut taxes on food for 2 years, which is something that the LDP hasn't been too keen on. And separately from that, there's still the political funding issue. Ishin wants to cut political funding from businesses and organizations altogether, whereas it's still something very important for the LDP and they still want to keep that. So there are still some big differences, but we'll see how talks will progress today as well.
There is a deadline for talks to end. So how is it going to play out then, you think, these talks as they continue over the next few days?
So there's going to be the first round of talks between the LDP and Ishin was held yesterday. There'll be another round today. There's still the sticking points that I mentioned earlier. Separately from that, the opposition parties have been trying to galvanize, have been trying to gather around and rally around another alternative candidate for the premiership. The name that's been coming up is Yoichiro Tamaki. However, with the opposition party, they need Ishin on board to actually be able to put up, have an alternative candidate. So everything hangs on Ishin, and at the moment, it's up to Ishin to decide whether they would want to side with the LDP and join a coalition there, or actually form a sort of bloc against Takaichi.
And the thing is that they need to get this done before there's his expected summit with President Trump. Yeah. Could we get there, and could that be Takaichi at this point?
Well, as I said, the prospects are looking better for Takaichi. So, but yeah, the timeline is very short.
A lot of the policies from Takaichi sort of align with what President Trump wants on defense, on more spending, for example.
Yes, that's true. And but President Trump is set to come to Japan. Well, reports say that he's set to come to Japan in 2 weeks. Next week, the Parliament will open to pick a prime minister, whoever it's going to be. And given that the LDP is the biggest force, even regardless of whether they have a majority or not, it is possible that if even if all of the talks fall apart, Takaichi will become prime minister. So there is that possibility, but the timeline is very short. There's still a lot of wheeling and dealing negotiations that's going on until probably Monday next week, when Ishin will have to make a decision on whether they want to form a ruling bloc with the LDP.
Sakura Murakami, great to have you with us on the latest on, of course, the political changes here in Japan. We have more ahead on the Asia trade. This is Bloomberg.
We see a genuine change for the better in Argentina. When you look at the strength of the economic position of Argentina, it's good to sustain the country going on that path.
That was the IMF Managing Director speaking to Bloomberg on the sidelines of the IMF and World Bank meetings in Washington. And Shery, the event has been dominated by US-China trade tensions, but Argentina has been another hot topic there, because you just heard the IMF saying it's working with both the country. It's also working with the US. We know the US Treasury just announced a $20 billion swap line to support Argentina on top of an existing $20 billion loan that was approved by the IMF in April. So the goal essentially is helping Argentina brace for more volatility ahead of those midterm elections this month.
Yeah, which is really interesting because this sort of framework is something that even South Korea might be considering, according to local media. So we are hearing that this type of Argentina-style currency swap could be something that could help South Korea keep with this $350 billion U.S. investment fund commitment, but at the same time keep financial stability. So the funding could go through, as you said, the U.S. Treasury rather than a direct deal between the Fed and the Bank of Korea. The resulting dollar demand from this investment fund was something that policymakers in Korea were really worried about. But let's turn to India, because the securities regulator there also overhauling its algorithmic and high-frequency trading framework. Speaking exclusively to Bloomberg, SEBI Chairman Tuhin Pandey said that move aims to ensure a level playing field for all market participants. The high-frequency trading segment is under scrutiny after the agency accused Jane Street Group of manipulating stock and derivatives markets, a claim that the U.S. trading giant denies.
Let us accept that the courts are fair. They give the people a chance, as much as to regulators as to others. And let that jury be out, let the verdict come. All what we have found is also very much in the orders themselves, and anybody can see, what is the kind of patterns it is there. We consider it manipulation. Somebody could say that it could be arbitrage, but there is I think as intelligent beings, we can really understand the difference between arbitrage and manipulation. Arbitrage is, of course, the arbitrage is the function of the markets. In fact, the markets function on bridging their arbitrage. If you have two exchanges, then obviously, the price will equalize across exchanges, because if there is one thing, the other, the movement will take place. Now, future market is also, in fact, has to be supportive of the cash markets and vice versa. But manipulation is something which will have certain patterns, which will then be called manipulative. And the regulators' findings initially was in the interim basis that these are the manipulative pattern. But then people have been given a chance to rebut it. So it's not that, that's a final thing from regulator side also. So anybody who is wherever the regulatory orders are passed, they have every chance to go back when they are asked for a show cause or for a reply, or they can go to a higher forum. So let that be. I think we should not be discussing individual cases, but I'm talking as a generic thing for any such case of this nature.
Chairman, one thing is clear: a lot of firms want to be in India right now. We're seeing a lot of interest. How do you see the HFTs, especially, and algorithms? AI is here to stay, of course. How do you see machines and technology playing out in India? What kind of role do you see for them in the Indian capital markets?
They are already doing a substantial part of the trading which takes place is through algo trading and HFT trading. We have already a regulatory framework in place in terms of which algos will be allowed, how they will go to the exchanges, they will be tested in simulation, and also that they do not pose any threat to the markets. But since the technology is also evolving very fast, we should also keep ourselves updated.
That was the SEBI chairman there speaking with Bloomberg's Jeanette Rodriguez at the Bloomberg Forum for Investment Management in Mumbai. We'll have more ahead on the Asia trade as we count down to the open of markets in Japan and Korea. You're also seeing the Aussie dollar there, little changed.
Take a look at how we're trading early in the Asia session. We're awaiting the Japan and Korea opens as Australia is down 0.3% after reaching a record high in the previous session on expectations of rate cuts. Nikkei futures at the moment losing more than 1%. This after we saw gains for the past two sessions. We had a slightly stronger Japanese yen as we are seeing some political uncertainty here in Japan easing a little bit. U.S. futures also down 0.4% after stocks fell in during the overnight session that angst around regional lenders in the U.S. and potential contagion is really leading to those market concerns. Over in South Korea, though, we had seen a little bit more positive sentiment from the potential of a trade deal with the U.S. coming through in the next few days. South Korean officials are in Washington to revive a $350 billion investment deal stalled over U.S. demands for upfront cash. Seoul is arguing that it would drain over 80% of its foreign reserves to ease financial risks. South Korea is exploring an Argentina-style currency swap, according to local media reports. Talks face added pressure after an ICE raid at a Hyundai LG EV battery plant, with both sides racing to finalize the deal before the APEC summit in Gyeongju. Joining us now is Deborah Elms, head of trade policy at the Hinrich Foundation. Deborah, always great to have you with us. Could we be a bit more positive about this U.S.-South Korea trade deal finally being inked? I mean, we heard about the parameters of the deal months ago, but we haven't necessarily seen any of those changes actually come forward.
Yeah, I mean, I'd like to say I'm optimistic, but given the difficulties of getting this one done, and particularly given the terms of this agreement, I'm not positive that it will get done, despite a lot of pressure, both political and economic, to do so.
One of the biggest issues seems to be how this U.S. investment fund would operate, with South Korean policymakers afraid of a financial crisis just because the huge dollar demand that this could actually cause. How can this be worked around?
Well, I think that is the real crux of the issue. I think from the Korean side, they originally put up not this large of a number, but they put up a number for inbound investments into the United States. They're already a very big investor in the United States. And so they thought, first of all, we've already done a lot. We're going to do some more. That would be good enough. And then that number just kept getting larger, one. And then two, when the Koreans saw the deal that the Japanese had signed with the United States, I think they got extremely nervous because they thought there'd be a lot more flexibility, one. And two, there'd be a lot more control by the Korean side on investments into the United States. And the Japan deal suggested that either one of those things was going to be true. And so I think for Korea, it is a serious problem. It's an enormous amount of money. It's a lot of course, taxpayer money. It's unclear whether they will have control over it. And I think they are understandably worried that if they sign that they have been signing up too much to whatever Donald Trump wants to do in the United States. And that is a real problem domestically within Korea.
What about also just the uncertainty on the U.S. side? They're still going through Section 232s carefully, for instance. We don't know broadly what it'll mean for the semiconductor as a whole. How does that also impact the appetite for investment and the ability to be confident in the decision to invest too?
I think there's growing nervousness about what an investment looks like into the United States. And of course, the raid by ICE on a Korean plant did not help at all. The domestic coverage of that in Korea was wall to wall. It was extremely unflattering to the United States and to the overall deal. So I think all of that is driving down sentiment for investment. Obviously, Korean firms been there a long time. It's not that the Koreans are going to pack up their bags and go home, but the idea of putting in even more money into the market at this moment seems particularly fraught. I think that's an issue. And then, of course, what does the other side of this deal look like? So it's not just investment, it's also trade. And as you noted, Korea is being hit hard by many of these sector-specific side deals on Section 232, particularly on autos and auto parts, with a bunch more that are lined up to be imposed, including on heavy trucks and on all kinds of equipment and machinery and so forth. That could hit Korea hard. And so if that is not included in their overall deal at the end, then the trade-off really looks complicated. Of course, it's investment, it's trade, and then, sorry to go so long, but the last bit is the security element. You know, how much do we have to do on economics in order for Korea to secure its security, I think is a good question in the minds of Korean negotiators.
How does this then set us up for the APEC summit? Because so much of the focus this week has been on would we see a meeting between Presidents Trump and Xi at this event? But Korea is the host country. So how also are they going to be looking at this upcoming meeting?
Well, I think that this summit is not turning out quite the way the Koreans anticipated. They thought this was going to be a good showcase for Korea, and instead they've had government changes. They've had challenges around this U.S.-China dispute, around dispute between the United States and Korea. They've had the potential to be overshadowed by a lot of other activities. And so I think the Koreans are now just probably hanging on, just praying that the whole thing gets over very quickly and that the damage is relatively limited, rather than looking to a potential triumph of having this meeting in Korea in the first place.
How can they regain the narrative here? As you said, it's really not turning out the way that they wanted at this point. We're hearing about infrastructure issues, even in Gyeongju, the host city for the APEC summit. What can the Koreans do at this point to bring this trade deal over the line in a way that benefits all of its industries? Because even the auto sector right now, the 25% tariffs have not gone down to 15% that was agreed 2 months ago. And even if they did, they would not be competitive against the Japanese, because the Japanese have also equalized the playing field that was before much better for South Koreans that had a free trade deal with the United States.
Yeah, I think, again, there's a lot of issues on the table for Korea, and it's a bit of a gut check moment. Do they even want an agreement with the United States? What would be the consequences if they said no? Those are real issues, I think, going on in Seoul, because, again, if the costs are too high and the benefits are very meager, then you might ultimately choose not to sign this deal or to continue to discuss it or whatever. As you mentioned, there is an existing free trade agreement that's been renegotiated multiple times, including under Donald Trump in his first administration. And so I think the Koreans are rightfully feeling like, well, what's in this new deal that would be better for us than what we've had in the past? Because each time we renegotiate, the terms get worse for us. How can we stabilize this relationship? It's extremely important to Korea. It's very important to the United States. It's about investment. It's about trade. It's about security. It's a very complicated relationship between two, I would argue, steadfast allies for a very long period of time that is under incredible pressure at the moment. And I think the goal is to, at minimum, make it not get worse. That's the goal, I think, for Korea at this moment. And then potentially make it better than it is right now, which is somewhat sadly not a high bar to get over.
It really also hinges on what happens with the US-China trade talks as well, these negotiations. What are we expecting as well out of, again, going back to the APEC meeting, and can we see any sort of meaningful or fruitful talks if they do go ahead between Presidents Trump and Xi?
Well, again, this is derailing. This is typical, though, for APEC. They often have a lot of sideline meetings that end up taking over the noise from the main meeting. And I think this time a potential blockbuster meeting that needs to happen between Trump and Xi. And my hope at this point is that the two sides agree not to continue the escalation. I don't think we're going to get a deal out of either side. I don't think we're going to get very much in the way of concrete deliverables. But for me, if they A, meet, and B, say that they're not going to continue to escalate, at least for some period of time, that would be a huge sense of relief, because the way that this thing has been going in the last few days even has been spiraling towards real challenges for companies, real challenges for both governments. And I think that you want to try to stabilize if at all possible.
All right, we're on that big countdown to these meetings at the end of this month. That was Deborah Elms there, head of trade policy at the Hinrich Foundation. And some other stories that we're tracking today as well. The White House is poised to deliver a major win for automakers, easing tariffs after months of lobbying by Ford and GM. The Commerce Department is expected to announce a 5-year extension of an arrangement that allows car makers to reduce duties on imported parts. That's a key offset to Trump's record-level auto tariffs. The announcement could come as early as Friday. India's foreign ministry says it's unaware of any conversation between President Trump and Prime Minister Narendra Modi. That's hours after Trump said Modi pledged to halt Russian oil purchases. A spokesman says consumer interests remain India's top priority in energy markets. Trump imposed 50% tariffs on Indian goods over its Russian crude purchases. President Trump is warning Hamas that the U.S. will have, quote, no choice but to go in if killings continue in Gaza. In a social media post, he says killings violate the ceasefire deal he helped broker with Israel. His remarks appeared to open the door to possible direct US military action in Gaza, though he later clarified that American forces would not be involved. We'll have more ahead on the Asia trade. This is Bloomberg. Hong Kong's financial secretary says the city's economy and IPO market remain robust, with more than 200 companies preparing to list. In an interview with Bloomberg, Paul Chan also weighed in on HSBC's plan to take Hang Seng Bank private.
Well, from our standpoint, this is business decision, and according to HSBC, this is an rationalization of their organization structure. They will continue to invest in Hong Kong and serve the public under separate entity, separate plan. Substantial investments will be made. So we take it as an additional possibility to better serve their clients. Yeah.
When you say additional investments, can you be a little more specific? Are you talking, a dollar amount? Other promises, like, for example, not firing some workers, not laying off workers?
Yeah. According to what they have told us, there will be no layoff, and the investment will be in the billions of dollars, not just in our market, but in our region. The Hong Kong, as you know, we are super connector, so connecting the mainland with the rest of the world. And Hong Kong is the best gateway for international businesses venturing into the mainland market.
So HSBC has promised to invest billions of dollars in Hong Kong and the region. How will it do that?
Well, it's over the next few years in terms of customer service, in terms of their technology. And as you know, say, for example, in Hong Kong nowadays, private wealth, asset management is promising. So not just HSBC, but there are some other international financial institutions adding headcounts in this respect to capture the opportunities.
When it goes ahead, what do you know about HSBC's plan with Hang Seng? Will it, for example, be on sale after it's privatized?
Well, this is a matter for the bank, but this has not been made to us as a plan.
Do you have any guidance from Beijing or Beijing's representatives about this process?
Well, under the one country, two systems arrangement, we operate autonomously. And the regulators for Hang Seng and HSBC is the Hong Kong Monetary Authority, and they are the supervisory body.
And you have had no contact with them about this particular deal?
Well, before they announced the deal, they let us know.
Did you think it was a way to deal with bad debts in the Hang Seng portion of the bank? Was it a good way to deal with that?
Well, in our prudent supervision of the banks, even before the privatization of Hang Seng, we do believe Hang Seng's book has fully provided for the provisions in respect of their loans to commercial-related properties.
Okay, sounds like you're on top of things. Generally on the Hong Kong economy, particularly the stock market, the Hang Seng index up 29% this year alone. I know you spoke with the U.S. Business China Council yesterday, and you said, things are stabilizing in Hong Kong.
Yep.
Just give us a little bit more about the outlook from this year into next.
Well, the financial services market is doing very well, the capital markets. As you mentioned, our stock market increased by about 18% last year, and so far this year by another 29%. And the volume, the transaction volume also went up quite a bit. From previously about $100 billion a day to now is close to about $250 billion on average daily turnover. So the volume is there. When we take a closer look of who are the investors, about half of the money are from what we call the southbound investments, capital flow from the mainland. The other half of the funds are from the international investors, Europeans, US, Middle East, and ASEAN.
What do you know about the IPO pipeline? Are you expecting it to
very strong? Yeah, we have over 200 companies lining up for IPO, and it makes perfect commercial sense. Take CATL as an example. This is the largest IPO this year so far, not just in our market, but globally. About 90% of the proceeds from the IPO will go to their plant in Hungary. That means for mainland companies going global, using Hong Kong as a platform to raise the funds and to employ the talents to help them in their overseas expansion is a very good business proposition.
Hong Kong Financial Secretary Paul Chan speaking to Bloomberg's Fanny Quinn. And these are the latest from the corporate front. UBS is tightening scrutiny of client money sources in its Asian wealth hubs, pushing some customers for greater disclosures to reduce the risk of further clashes with regulators. The Zurich-based lender has enlisted Deloitte and KPMG to review client documentation primarily in Singapore, but also in Hong Kong for any signs of illicit activity. The consortium buying video game maker EA is set to add more than a dozen banks to his underwriting group. This comes after JP Morgan put up $20 billion of debt to bankroll the leveraged buyout. Around 15 banks are likely to join the underwriting group, with some taking around 10% of the deal each, while JP Morgan will keep around 40% of the deal. Bloomberg has learned that billionaire Paul Singer's Elliott Investment Management is raising billions of dollars in new cash. A source tells us that the hedge fund will take in as much as $7 billion in a fresh funding round as it prepares for new trading opportunities. The move comes at a time some of the largest multi-strategy hedge funds remain close to cash. Citadel Securities India COO Gustav Eriksson says that the company is mulling an entry into commodity markets in India as it sees the country as a key growth driver over the next decade. The firm is scaling up its onshore business in India, which it says remains unaffected by an investigation by the nation's markets regulator into Jane Street.
If I look at where growth is going to come from in the next, call it 2-3 years in India, and what gets me excited about the market, I think one is something you touched on earlier, which is deepening cash market liquidity. Two is something like MCX and commodities. We see tremendous growth there.
We have more ahead on the Asia trade. This is Bloomberg.
South Korea's Kospi closed at a record high yesterday as traders watched to see if the rally continues into today. Renewed optimism over a potential US-Korea tariff deal lifted sentiment across export-heavy sectors, especially automakers. Let's bring in our Bloomberg stocks reporter, Yu-Kyung Lee. So, Yu-Kyung, I think there's sort of two main factors here. You've got this optimism around the trade talks after you had Besant saying, yes, we could get a deal within the next 10 days. And at the same time as well, you've had these strong AI-related earnings, so that's positive for names like Samsung, SK Hynix.
Yeah, that's right. So I think in the next couple of days, we're going to see from local media and from the United States where the trade officials are having talks with the U.S. officials in Washington about these developments as the stages of this trade negotiations goes to the last final deal. So we know that the $350 billion payment that U.S. has been demanding to South Korea, the South Korean officials has been saying that it will be difficult for the nation because of the financial stability to make the upfront payment that South Korea, the U.S. has been asking for. And I think there has been some optimism from the South Korean trade officials that the U.S. might be taking some proposal that the South Korea has been asking, because the won could be very sensitive with this where this trade deal is going. And one of the proposal being considered is that South Korea could be having the Argentina style currency swap deal with the United States, meaning that Treasury it could be using the U.S. Treasury funding instead of a direct currency swap deal between Bank of Korea and Federal Reserve. So some of this optimism has been flowing into the South Korean equity market in the last couple of days. So with the more than 50% gain in Kospi, that has been adding more fuel to the benchmark Kospi. So I think even not just the equities market, but if you look at globally in other asset classes, there are very few asset classes where the gains has been stronger than the Kospi
maybe exception for gold. Kospi is up now more than 56%, and that is its best performance since 1999. So with the upcoming trade deal negotiation announcement, I think there could be more legs to this rally. Yeah.
What else are we watching? Because we saw some uncertainty in the overnight session, especially around regional lenders in the U.S. Are there any parts of the Korean market now that we've come this high that could be vulnerable to the uncertainty?
And I think that the extent that the South Korean equity investor will be looking at the U.S. lenders and what kind of repercussion that it could have. And right now, I think investors are more focused on the AI stock after this positive positive TSMC news overnight. And they will be also watching the auto stock. There has been some news about the auto tariffs overnight, and Hyundai Motor have seen strong gain yesterday on the hopes of the trade deal. So the auto stock, which has been lagging the Kospi, might be the one that could see some rotation money move. So I think I would watch the Hyundai Motor, Kia, and their suppliers again, and as well as the chip maker Samsung SK Hynix after this TSMC earnings.
Bloomberg stocks reporter Yu-Kyung Lee there. And given what Yu-Kyung was telling us, of course, we'll be watching some of those stocks linked to a lot of those chip trades, the auto trade as well. And you can see as we head to the opens of Korea and Japan shortly. Watch chip equipment makers in Japan. Guidance from the most critical companies in the global chip supply chain, ASML, we discussed TSMC. They all really pointing to resilient AI capex spending. TSMC now seeing 30% growth in annual sales following better than expected jump in net income in the September quarter. Also watch automakers in South Korea and Japan. We're talking about that potential trade deal with the U.S. in order to ease tariffs. Bloomberg now learning that the Commerce Department will announce a 5-year extension of an arrangement that allows car makers to reduce what they pay in tariffs on imported car parts.
Yes, Shery, certainly lots of sectors to be tracking there. And you can see, actually, when we take a look what's happening in futures intraday for the Nikkei, looking to open about 1.5% to the downside. But we did have, as you were mentioning there with Yu-Kyung, concerns around regional lenders, credit quality in the U.S., and we saw some downside pressure. ASX 200, nearly 1 hour into trade. Again, we're in the red, so perhaps a bit of a downbeat end to the week. But the market opens next in Seoul and Tokyo. We'll have the details. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens and bracing for potential volatility. We had U.S. stocks falling in the overnight session. Regional lenders under pressure on some fraud concerns and really those problematic loans, Annabelle. But also at the same time, we had upside in chips, of course, Oracle also coming out with some positive commentary.
Yeah, Oracle told us about its margins, so that was positive because we had a little bit of concern around that. We had the earnings from TSMC, for instance. We just had ASML earlier this week, so it's that positive momentum we continue to see in AI. Does that really offset, though, these woes around private credit?
We also had some positive momentum when it came to the expectations of that trade deal to come with the United States, especially around South Korea, right? So we saw the automakers broadly across Asia gaining ground in the previous session. You can see right now Japanese markets coming online and falling for the first time in 3 sessions. You're seeing the Japanese yen also strengthening towards that 150 level against the U.S. dollar. We have seen a little bit of strength in the Japanese yen for the past 4 sessions or so. So this perhaps pressuring a little bit of those exporters in Japan. We had seen Japanese really stocks gaining ground in the previous session, given that Governor Kazuo Ueda had also some comments in D.C., but also pointing to perhaps more tightening to come from the Bank of Japan. Take a look at how Korea is trading. I mentioned those trade optimism with the United States, and the Kospi actually rising above 3,700 for the first time ever. So We were at record highs. You can see right now the downside pressure a little bit, and we're seeing a little bit of a mixed picture. Downside for automakers. We had seen a huge rally when it came, for example, to Hyundai shares, which saw the best day since May 2024, and expectations of that trade deal to come with the United States. So perhaps a little bit of that really selling that we're seeing and profit taking in the South Korea market. Hanwha Ocean at the moment gaining ground. Of course, a lot to do with the shipping industry as well when it comes to the details of that trade agreement with the U.S., Belle.
Yeah, and also, of course, after China sanctioned those U.S. units of Hanwha Ocean early this week. But let's take a look at what's happening with treasuries, because we actually have seen them getting a bit of support really over the session, and that was after you mentioned these cracks that we've got appearing in regional banks in the US in particular, concerns around credit quality. So that is what has really been the bid, or what has been behind the bid in treasuries. It seems perhaps it could have a little bit of staying power. It is something, of course, that also really the other factor is the complicated picture around where the Fed goes from here. You mentioned earlier, Shery, we're still in this shutdown period for the U.S. government, so we don't even have clarity on the outlook for inflation, for instance. Where do officials go with rates? It still does seem that there is that case for easing, but we heard earlier from Chris Waller. Take a listen.
For the last 40 years, demand has outstripped supply. And what does that mean? Prices go up, yields go down. At some point, if that reverses and the supply starts exceeding demand, the only way you're going to get the markets in the world to hold this stuff is you lower the price, which means the yield's going to go up. So for me, having good, stable fiscal policy is the best way to ensure that you don't have that happen.
Let's bring in Martin Schulz, head of International Equity Group at Federated Hermes. Martin, great to have you with us. So what are you seeing in terms of the global economic picture, the path that the Federal Reserve could take, and the potential implications for Asian markets?
Well, thank you for having me on this morning. Good morning to you both and to your viewers. At Federated Hermes, our view is that the global economy is healing, and at the same time, we are starting a rate cycle, obviously not in Japan, but we believe that manufacturing is going to, even though it's been weak here recently, is going to start rebounding. And again, there's a lot of political uncertainty right now, obviously related to tariffs and the geopolitical side. But we believe that the next few weeks are going to be potentially very volatile. You talked about the South Korean trade negotiations and obviously what's happening with China. But we think that at the end of the day, China has the ability to put in some policy prescriptions. We think it's starting to bounce back. We think Europe is coming back, and the U.S. for sure, based on some of the background we've seen there with respect to the regulatory environment, other factors leading to an upturn in the global economy.
Yeah, I think
how attractive is China still, given that, of course, we could see those conversations with the U.S. We are expecting President Trump and President Xi Jinping to meet on the sidelines of the APEC summit. Depending on how that goes, are there more risks for Chinese assets?
So obviously the Chinese economy has been weak. Property markets continue to be fairly weak, but I think on the inflationary front, there's been some very interesting positive developments. And so I think on the one hand, the Chinese do have some confidence now going into these negotiations on the economic side. But I do want to stress that the Chinese economy is fragile. And from that perspective, I want to be clear that I'm hoping that both sides don't overplay their hands, because I do feel that maybe that's kind of one of the potential risks we see. So obviously a trade deal is not assured, but that's our base case. And so the next few weeks are going to be volatile. But then, as you mentioned, Shery, as it relates to the upcoming meeting, we hope that will be the end of the beginning of the end, so to speak, and we'll see how that all plays out. But obviously, that's something that will be determined in the next few weeks.
Is there anything that contests that positive base case you've got? Because, for instance, this week we heard Jamie Dimon talking about possible cockroaches in private credit. We've seen it expressed in a different way with two regional lenders in the U.S. overnight, and certainly those possible cracks or the risk of that has weighed on market sentiment. Is there anything that can challenge your thinking?
Well, sure. I mean, the black swan scenarios are always out there. We could obviously see further escalation in the Mideast. And to your point, Annabelle, as it relates to what's happening in the U.S., I mean, we've always known that the commercial property markets would be going through this period of digestion. And obviously, what Jamie Dimon indicated is something that's worrisome. We'll see. Obviously, we expect the Fed to step in and to become much more focus on these areas, but it's always one thing that you never know what's going to come out of left field. But from our perspective at Federated Hermes, we actually have a top-down country allocation approach that allows us to kind of overweight and underweight certain countries and regions in the world. And from our perspective, Asia is the place for us to be right now. It's both China, Hong Kong, South Korea, and Japan.
And that's, I guess, also partly the tech story and all the enthusiasm we've continued to see around AI. Do you have any concerns about a bubble as well, or do you also take a lot of cheer from those results we have from ASML, TSMC, the Oracle margins overnight?
Yeah, I think you listed some of the positive ones, but yes, we have to be concerned about where AI is heading. Valuations are definitely stretched. The U.S. market is overvalued at the current state, and it does, it depends on where this all goes. But on the one hand, Asia benefits from the AI infrastructure space, and you mentioned some of the companies involved in that space. But also, there are other structural, thematic areas that we think are very important to Asia, and those would be electrification, obviously, but then also the other themes as it relates to defense. And you see that particularly represented in Japan and in South Korean companies that have been doing very, very well on that front. And we think that structural tailwind will continue.
Markets like Japan and South Korea, especially South Korea with 50% gains or so, they've been on an incredible tear. Is there still room for more upside, given, of course, also the political instability that we're seeing here and there, whether it's trade talks with the U.S. and South Korea or just the elections of the prime minister coming up here in Japan?
Well, those are two separate cases, but in the case of South Korea, we think that the government is focused on value up and the reform methods, which we think will make it even more. Again, the two markets in question here, that would be South Korea and China, are undervalued. So as we look at our top-down country allocation process, we look at basically valuation metrics, and then we look at obviously risk factors. And in the case of currency and current account to GDP scenarios, South Korea is in a position where they're making reform efforts. They're maybe a few years behind, you could argue, than Japan as to what they did several years ago, and now we're bearing fruit. Japan is actually, historically kind of a value trap, but from our perspective, Japan is now on the up leg. This chronic disinflation, we believe, has been beat. You're seeing some of the same potential situation in China. But in Korea, we do see that the government's reform efforts are going to continue to lead that country forward, particularly with these tailwinds of the AI, the semiconductor space, and defense.
Martin Schulz, good to have you with us, head of International Equity Group at Federated Hermes. And take a look at some of those chip stocks that we're watching in the Asia session. Of course, we had TSMC reporting. We actually had ADRs tumbling in the overnight session. So we are seeing some downside pressure when it comes to those tech names across Japan. And this despite the fact that TSMC actually had a pretty strong earnings report. They lifted their full-year sales growth estimates to the mid-30% range. They raised the capex floor, stressed the signals from customers are stronger than before. We also had some positive commentary from Oracle as well in the overnight session about their margin expectations for AI infrastructure projects. But you can see broad downside across Asia today, with the Nikkei also losing ground for the first time in 4 sessions. We have more ahead on the Asia trade. This is Bloomberg. We're watching some of those big car makers in the broader auto sector because we had seen the best day, for example, in South Korea for Hyundai since 2024, and reports that we might be getting very close to that U.S. South Korea trade deal. At the same time, Bloomberg has learned that the White House is poised to ease tariffs on the U.S. auto industry. The Commerce Department slated to announce a 5-year extension for an arrangement that allows automakers to reduce what they pay in tariffs on imported car parts. So we continue to watch the latest developments in the auto sector that, of course, has faced these U.S. tariffs coming from the Trump administration. Bell.
Yeah, Shery, and still on trade policy, China's Commerce Minister Wang Wentao has blamed the U.S. for the recent escalation in trade tensions, citing American actions after the Madrid talks. Wang says ties soured after the U.S. introduced a series of restrictive measures against China. Meanwhile, Foreign Minister Wang Yi struck a more diplomatic tone, saying decoupling from the U.S. is not a realistic option. But as we do see those tensions escalating between the U.S. and China, China's economy is going to be a major focus because we've got a raft of data that's due on Monday that's likely to show the economy expanding at the slowest pace in a year last quarter, despite a boom in exports. That's a disconnect that the Communist Party may move to rectify by championing higher consumption when it convenes for a key meeting next week as well. Let's bring in our senior reporter for Chinese economy and government, James Mager. So, James, we can get to the fourth plenum in a moment, but let's just start with the data that we're expecting on Monday. What are we going to see exactly, do you expect?
The expectation is I think you're going to see more of what we've seen in the last few months, but worse. Investment is expected to drop down to the same level as it was last year, so no growth at all for the first 9 months of this year, which is a really bad result. And what's really driving that is the continued slump in housing investment, but also local governments aren't investing in new infrastructure. They aren't investing in new projects. They're selling a record amount of bonds, and they use that money to repay older debt. So you're seeing a pullback from the government sector. You're seeing a pullback from the housing sector. You're seeing a pullback from consumers, and you're also seeing a pullback from foreign investors who are cutting back on the amount of new money they're putting into the Chinese economy. And then that's all leading to slower consumption growth, and also weaker industrial output. So, the headline number is probably going to be 4-point-something GDP growth, but when you look under the hood, it really isn't a sign of a strong, rapidly growing economy as the government probably wants to see.
Could we expect some relief on the trade side, given that we are expecting this President Trump, President Xi Jinping meeting as well on the silence of APEC?
I think on trade, there's two things about trade. One, Chinese exports are doing amazingly well this year. You're seeing record numbers of exports. This trade surplus will probably be $1.2 trillion, which is double what it was before the pandemic. So you're just seeing a massive, massive amount of goods leaving China's shores going overseas. So that is really the best or the brightest spot for the economy. I don't think you're going to see massive, huge improvements in relations with the U.S. and China, even before the last 3 weeks of the U.S. putting in new restrictions on, or increasing the restrictions on the entity list and China responding with these rare earth curbs. Even before this latest to and fro that we're seeing at the moment, the expectation for the meeting in South Korea wasn't that there was going to be some massive deal that was going to solve all these problems. There may be some agreements on, or there might have been some agreements on things like soybeans, small, irritants between the two sides. But the two sides really aren't talking about the really fundamental problems that exist between the US and China. They're still really talking about these, they're important problems like rare earths, but they're still quite superficial issues, that have arisen quite recently. And so I don't think you're going to see some sort of massive change in US-China economic relations at the end of this month in Korea. I mean, I'll be pleasantly surprised, if that doesn't, if something like that does happen. But we may see a slight turn down of tensions, but I don't think you'll see more than that.
So then how does this also set us up going into the fourth plan in this coming week? Because we're going to have that new opportunity for a 5-year plan. What are they likely to prioritize in light of that relationship plus the state of the economy?
I mean, I think they're going to prioritize national security and the domestic economy or domestic autarkic independence, as they have been doing for the last 5-year plan. China clearly doesn't want to be reliant on America for anything it requires for its growth. So semiconductors, rare earths, industrial technology, EVs. All of these kinds of products, I think you're going to see a continued focus on making sure that China doesn't have to rely on America and its allies for the raw materials and the technology to make those. I think you're also going to see a continued focus on, or at least a continued talk about rebalancing the economy. We want to have more, stronger consumer side of the economy. We want Chinese people to spend more and to buy more. But we've been hearing that refrain for a couple of years now, and there really hasn't been the massive changes in government spending that you would need to realize that. And so whether we just hear more talk about that or whether we actually see something real which may lead to that, I think is something that everyone's going to be looking at very closely.
Bloomberg senior reporter James Mager there with the latest on China. And IMF Managing Director Kristalina Georgieva says that while the global economy has so far remained resilient in the face of U.S. tariff challenges, nations must not become complacent. Speaking on the sidelines of the IMF and World Bank meetings in Washington, Georgieva urged global leaders to stay calm.
We have seen the world economy being quite resilient. And very important, we have seen countries acting responsibly towards their own interests and the interests of the world. Let me unpack this. One, we have upgraded our growth projections since April. Why? Because performance across the world is quite strong. Why is it strong? Because the tariff shock from the United States is not as dramatic as we feared in April. In April, if you recall, the announced tariffs were 23%. Today, US tariffs nominally 17.5%, but what is being collected is somewhere around 9%. So smaller shock from the US. Two, what did the rest of the world do? With the exception of China and initially Canada, that retaliated against the United States, the rest of the world said, not tit for tat. We are not going to engage in retaliatory action. So we have 191 members. 188 of them decided to trade by the rules that exist. And the third very interesting thing is you now see the value of strong fundamentals. Countries have built good institutions, they have built good policies, especially in the emerging world. Now we are seeing the payback from that investment.
So is this the reason why you think that it's legitimate for the market to be looking through some of the recent flare-up in tensions between the U.S. and China? Because ultimately trade keeps going, and the world has sort of shown that it isn't really willing to escalate to that degree.
That is exactly the reason why everybody's calmer, even if China-U.S. tensions go up and down, because there is no spillover. But let me say this, we shouldn't be complacent. What we see is that Chinese goods that used to come to the United States are now redirected to Asia and to the European Union. If these recipients of Chinese goods feel the heat and decide that they too should impose tariffs, we may still have the risk of a trade war moving from one place to another. So our message to everybody is be calm, and to China, be careful. Do not provoke other countries to see you as a threat to their economies.
That was the IMF Managing Director there speaking with our colleague Lisa Abramovich, and we'll have more ahead on the Asia trade. This is Bloomberg.
A broad downside across sectors in Japan, with communication shares and also financials leading the declines. But this, of course, as we head towards a parliamentary vote next week to decide the prime minister. And Japanese defense and nuclear power stocks could gain from any coalition led by the ruling Liberal Democratic Party. Bloomberg's Alice French is here with the details. And this is sort of the Sanae Takaichi trade.
Yeah, exactly. I mean, what we're really seeing here, or what investors are hoping for, is kind of a revival in that Takaichi trade. You know, we had a moment this week where it looked like we could potentially have an opposition-led coalition, and that was kind of fueling some jitters around whether we can really bet on this. You know, people are expecting Takaichi is going to be pro-stimulus, particularly around defense. We know that she wants to restart some nuclear reactors. We know that, you know, things like infrastructure and stuff might also get some, you know, extra government spending. And so that Takaichi trade is really based on this idea that you pile into stocks and then you sell JGBs and the yen. We know that Takaichi is slightly more easy when it comes to monetary policy too, right?
Does that trade stay in place even if they form a coalition with Ishin?
So that's what people are expecting. You know, we had one of the leaders of Ishin yesterday, you know, talking about how, you know, the LDP and Ishin are aligned on some of the key issues when it comes to things like security and energy. So I think we would expect kind of any coalition that involves the LDP, the Takaichi trade, to kind of have a nice run there, specifically with Ishin. I mean, we saw yesterday, for example, interestingly, stocks that are related to Osaka and the Kansai region. So we know that Ishin is kind of Osaka based, and they would be looking to kind of boost Osaka, you know, nationally if they get into the government. So we saw some kind of railways that are based down there doing really well yesterday, and we may see that kind of extending if Ishin does, you know, if its influence grows in the parliament, I think.
So, Alice, what about the other elements of the Takaichi trade, the yen, JGBs? What's the outlook for them?
Yeah, so, you know, we had seen the yen really weakening sort of early this week and after Takaichi won the LDP election. But it's kind of strengthening a bit today, and that seems to be more based on kind of weakness in the dollar than it is strengthening in the yen. But I think we would expect, you know, going forwards, if we do get that confirmation that Takaichi is going to be the next PM, I think we can expect that the yen to stay pretty weak. We know that there are some jitters around, you know, fiscal spending. We know that she wants to up government spending. And so I think we would expect the nerves around JGBs to continue. Of course, we know that the LDP, whatever happens, it's still in a minority in the government. And so the extent to which Takaichi would be able to hypothetically actually go forward with these policies is still uncertain. But I think until we have any clarity around that, I would expect JGBs to see a little bit of pressure. And the yen, of course, there's many factors impacting it. But I think, you know, people are expecting that it would stay on the weaker end if we do see Takaichi going forwards as the new leader.
Alice French, Bloomberg's Japan stock reporter here with the latest on all of the assets trading across Japan. Of course, Alice was talking about the Japanese yen gaining now for a fourth consecutive session, but we still haven't been able to break that 150 per dollar level. We have heard from the Bank of Japan Governor Kazuo Ueda in the overnight session as well, saying that the bank will continue tightening if confidence in achieving its economic outlook strengthens. This was on the sidelines of a G20 meeting in Washington, D.C. We have more ahead. This is Bloomberg. We have breaking news out of Singapore. We're getting the non-oil domestic export numbers. A rise of 6.9% year on year after 2 months of declines is also coming in better than economists had expected. Electronic exports year on year growth of 30.4%, a huge jump from a contraction from the previous month. Of course, we know that the U.S. reciprocal tariff rate on Singapore is 10%, which is lower than the 19% on its ASEAN 6 neighbors, and it's a heavily vulnerable and exposed economy when it comes to global trade, and non-oil exports now rising 6.9% year on year after 2 months of contraction. Take a look at how the broader markets are trading across Asia, because we have seen broad downside with the Nikkei now losing 1% as the Japanese yen continues to strengthen towards a 150 level. The Kospi is also down 0.4%, despite the fact that we're seeing a little bit more optimism about the potential trade deal with the United States. And the ASX 200 also coming down from record highs that we saw in the previous session, Bell.
Yeah, big focus as well on what's happening in the tech space because we had TSMC reporting yesterday afternoon. We also had what was happening with ASML earnings earlier this week as well. So you can see the last close there. You saw ADR slipping. We'll be watching Taiwan when it opens at the top of the hour. But certainly the guidance that we've got from ASML, TSMC, two of the most critical companies in the global chip supply chain, is pointing to resilient AI capex spending. TSMC is the latest to hike its projections, now forecasting 30% growth in annual sales, following a better than anticipated jump in net income for the September quarter. Its listing in Taiwan extended gains yesterday afternoon, though its US listed ADRs, as I said, pulled back overnight. Let's get more on this now. Bring in Neil Shah, Vice President for Research at Counterpoint Research. And Neil, thanks very much for your time this morning. What do you make out of the numbers? There was a lot of expectation, a lot of concerns. We could be in an AI bubble, but it seems like, at least for now, from sort of this end of the semiconductor supply chain, things look pretty robust.
Yeah, the demand is insatiable. If you look at on the AI servers, or HPC, what TSMC says in its earnings, it's driving most of the growth for everyone. Look at the number of investment, the hundreds of billions of dollar investments which are in pipeline for bigger hyperscalers, starting with OpenAI, right? So that is driving a lot of demand for GPUs, accelerators across the board. It's more of hyperscalers' own accelerators designed with Broadcom, or it's with it's with NVIDIA or the merchant silicons like AMD. So we are seeing a lot of demand, and if you look at TSMC's earnings, most of these are on the N5 node and the N3 nodes moving forward, and that contributes to almost 35 to 40% of the revenue, the N5 nodes and the N5 nodes, and then the N3 and N2. So as it moves to more advanced nodes like a N2 node, obviously it will require more tooling and advanced machining, and that is where it links to ASML gaining a lot of pipeline in terms of the revenues which it has seen for the last couple of years.
What do you make then around concerns about what we see in terms of export controls and you know, that side of the equation still not being factored in, and uncertainty essentially around tariffs go from here in the US as well?
Yeah, I think China has always been one of the bigger markets for ASML as well as TSMC. However, with all of these exciting AI boom which is going on stateside, TSMC is full on capacity with all the chips that it can manufacture. For Chinese players, obviously it's unfortunate, but they have homegrown players which are building with homegrown fabs like SMIC. So, but obviously it's not on the as advanced node as NVIDIA or AMD are at this point. But I think that is good enough for now because China is focusing more on efficiency, and that's why it's a revenue loss for someone like ASML or TSMC. But still, what Chinese foundries are doing is basically they are using DUV machines, which are still which is not under export control at this point. So they can still buy DUV machines and use 7 nanometer to produce all these AI accelerator chips for their homegrown chip players.
And Neil, when it comes to a chip designer at Cambricon, we are expecting their results later today. What role will they play in this AI race? And what are your expectations for their numbers and what could potentially reflect in the broader AI space and chip space in China?
Yeah, that's a great point. So Cambricon, along with Huawei HiSilicon, is one of the stars for building the entire AI stack for the China ecosystem. And that is where I think it's important you have the entire stack from hardware to software. And what Cambricon has done well is working with the foundries and the software ecosystem players like SenseTime to optimize the stack. As I said, they're focusing on efficiency. And this is where they can do much more with much less. At the same time, I would say Cambricon, the revenue is still at a few hundreds of millions per quarter level, and they still are toying with profitability, but there is a lot of investment coming in from the ecosystem as well. So I think investment is not a problem. It's more about securing capacity to produce as many chips at the foundry within China, SMIC. For example, SMIC is at like 20,000 to 30,000 wafers per month, compared to TSMC, which is like 200,000 wafers per month. So SMIC has to reach 100,000 wafers per month to produce as many chips as the China ecosystem wants.
You mentioned that cooperation with SenseTime, and we saw really shares rallying on that software and hardware sort of strategic strategy when it comes to Cambricon. Could we expect more of these plays, especially in the build-out of the Chinese ecosystem, and what would be your next bets?
Yeah, absolutely. So if you look at for the entire AI stack, which is the chips, and then the chips software, which is similar to NVIDIA and NVIDIA CUDA. So even Cambricon, Huawei, all of these have this entire stack, which are optimized with all the LLM models which are running on top of it, for either for training purposes or for inferencing. So you'll see more partnerships across the China ecosystem, right from DeepSeek down to the Cambricons of the world. And you'll see more ecosystem developing where they have to focus more on optimization, as they don't have the luxury of latest nodes to manufacture high-end chips, which can do more computing at less power and with less chips.
Neil, thanks very much for joining us. That was Neil Shah there, Vice President for Research at Counterpoint Research. And actually, China's semiconductor supply chain is going to be a big focus for us this coming week, because the next episode of Bloomberg Tech Asia is going to be focusing on all of that investor appetite we've seen around China's semiconductor system, and also what is actually happening at the innovation and production level as well. So that's coming up 8:30 a.m. Hong Kong time on Friday, October 24th on Bloomberg Television, 8:30 p.m. Thursday in New York. And subscribers can also watch it on the terminal using our TV Go function. Staying with China Tech, because Alibaba is carrying out the large-scale deployment of generative AI across its e-commerce platforms for the first time during this year's Double 11 shopping festival. Speaking exclusively to Bloomberg, Group Vice President Kai-Fu Zhang also told us how the technology is helping partner merchants and enhancing the overall user experience.
We actually did a very substantial rework of our search and recommendation this year, starting with our 2 billion product listings, right? Because we have really one of the biggest product category in the world, which is 2 billion strong. And we actually used AI and large language model to rework that underlying product catalog. We enriched the product content. We also re-indexed the entire product catalog, which is a foundation for the search engine. And you can ask our search engine, what is the best gift for someone who is really stressed out in high school and he's having headaches, for example, right? And the AI will be able to comprehend your semantic query and to analyze your underlying need and give you recommendations of the right products. So this was not possible in a simplistic search engine where you have to tell the search a product name and it's going to give you that particular product.
So you mentioned 20% increase in product relevance. So does that mean we can expect very robust numbers from this year's November 11 sales?
So 20% is actually a very large number, right? Yeah. Because, I mean, we operate a very mature tech stack. I mean, this technology stack has been optimized year over year for many years. So you don't often see 20% lift in A/B testing. But we are able to achieve that with large language model. Of course, there are modifiers, right? That's 20% increase in relevance when the consumer's queries are semantically complex, right?
How much is the conversion rate, though?
So if you have a 20% uplift in relevance, the conversion rate improvement is also quite significant. We are able to achieve a 10% improvement in our click-through by using large language model to give the consumer more positive surprises, right? The idea is that, I mean, the consumers have a lot of product browsing and click preferences, but sometimes you want to see new products, right? You want to see something that you've never expressed any interest in, right? And that was kind of hard in our original architect.
So how much is the cost savings that you're able to help your merchants achieve with AI?
Yeah. So because we are providing a very comprehensive suite of tools for our merchants, right, including content generation, including customer service, including marketing, and all these other use cases. But I'll just give you one example. So in AI customer service, like chatbot, we provide our merchants And the cost saving is actually 20 million Chinese yuan per day.
Your CEO did mention that Alibaba is planning to increase capex spending beyond the 380 billion yuan that was previously pledged.
Yeah.
Do you have a concrete number to share in terms of how much more investment in AI?
So obviously, I'm not the right person to answer that question. But I'm on the application end. What I can tell you is that the actual number of usage in terms of the AI inference and tokens is actually growing pretty fast.
Alibaba Group Vice President Kai-Fu Zhang speaking with Bloomberg China correspondent Mei Min Lo in Shanghai. We have more ahead on the Asia trade. This is Bloomberg.
Citadel Securities sees India as a key growth driver over the next decade. The company's India COO, Gustav Eriksson, spoke exclusively with Bloomberg's Menaka Doshi at the Bloomberg Investment Forum in Mumbai, sharing plans to scale up their business in the country.
You mentioned liquidity in the derivatives market, Gustav. Do you feel that way about the cash markets as well? That there is adequate liquidity for businesses like you to prosper?
So we are active in the cash market. So in some respects, yes. That being said, do I think that there's more that we can do to promote more liquidity in the cash market? Absolutely. I think everyone is aware of it and working on it. So I think one of the key things, for example, that's a focus right now is the SLBM segment of the market, right? And I think that's something where SEBI, multiple market participants, both on the supply side, in our case on the demand side, are very actively looking at what can we do to make SLBM more effective, to make the cash market deeper. So I think, yes, there is liquidity, but there's certainly, I would say, headroom for more liquidity in the cash side as well.
The other area we've seen, and my colleague Jeanette spoke about this with the SEBI chairman earlier on in the conference, is the SEBI action or regulatory action against one of your peers, which is Jane Street.
Yeah.
Now, of course, I'm not asking you to comment on that particular case, but there was concern when that SEBI order came out that it could have a potential chilling impact on several large, players like you.
Yeah.
Has it had a chilling impact?
Well, I would start by saying I agree. I obviously can't comment on an ongoing case. I also cannot speak for all of our peers. I can only speak for Citadel Securities. And I think what I would say for us is that it has not. I think we remain committed to the Indian market. We continue to invest in our platform here, whether it's our talent, building up the onshore team, whether it's our partnerships. We work with the IITs to invest in both a GPU and a quantitative finance lab at the IITs. So I think, again, we take comfort in the fact that SEBI operates to try to create a regulatory environment that promotes long-term sustainability in the market. We're supportive of that. We will keep engaging with them. And we are certainly all in on India.
Okay, great. You spoke of investing in India. I'd love to know what do you think are the next big growth opportunities. So if you can paint for us a picture of the size of your current, I know you won't share data, so not specific numbers, but the relative size of your business in the cash markets, in the derivatives markets. What about fixed income?
Yep.
What about commodities? Where are the key growth opportunities for the next 5 to 8 years?
Great question. I think when I look at our business, right, I think what sets us aside is that we have very, very healthy sides on both sides of the house, both on the derivative side as well as the cash equity side of the business. I think if I look at where growth is going to come from in the next, call it 2-3 years in India, and what gets me excited about the market, I think one is something you touched on earlier, which is deepening cash market liquidity.
Okay.
So I do think we are really encouraged by things like SLBM, again, the ability to go short. In some respects, we have a very, very deep single stock futures market because the ability to go short in cash has been somewhat restricted historically. So I think that's exciting for us. Two is something like MCX and commodities. We see tremendous growth there.
Citadel Securities India COO Gustav Eriksson speaking exclusively with Menaka Doshi at the Bloomberg Investment Forum for Investment Management. And we're watching sovereign bonds across Asia right now following treasuries higher after we saw the 2-year treasury yield falling to the lowest level since 2022. The 10-year yield in treasuries also below 4% at the moment. All of this really to do with that uncertainty over regional lenders in the United States. Zion's Western Alliance tumbling. They disclosed problems with loans involving fraud allegations, really bringing back some of those memories of the banking turmoil of 2023 when yields collapsed with the Silicon Valley Bank and also Signature Bank 2 days later. So we're continuing to watch the JGB 10-year yield also falling at the moment towards that 160 level, Bell.
Yeah, Shery, and also taking a look at what's happening in the metal spaces, because you're continuing to see, well, we have been seeing that big ascent for both silver and gold. This morning, though, it's still that haven play into bullion there. You can see prices continuing to climb. We are at really all-time highs for this. Brent crude there, pretty steady, not really seeing too much movement, but we'll have more ahead. This is Bloomberg.
Hong Kong's financial secretary says the city's economy and the IPO market remain robust, with more than 200 companies preparing to list. In an interview with Bloomberg, Paul Chan also weighed in on HSBC's plan to take Hang Seng Bank private.
Well, from our standpoint, this is business decision, and according to HSBC, this is an rationalization of their organization structure. They will continue to invest in Hong Kong and serve the public under separate entity, separate plan. Substantial investments will be made. So we take it as an additional possibility to better serve their clients. Yeah.
When you say additional investments, can you be a little more specific? Are you talking, a dollar amount? Other promises, like, for example, not firing some workers, not laying off workers?
Yeah. According to what they have told us, there will be no layoff, and the investment will be in the billions of dollars, not just in our market, but in our region. The Hong Kong, as you know, we are super connector, so connecting the mainland with the rest of the world. And Hong Kong is the best gateway for international businesses venturing into the mainland market.
So HSBC has promised to invest billions of dollars in Hong Kong and the region. How will it do that?
Well, it's over the next few years in terms of customer service, in terms of their technology. And as you know, say, for example, in Hong Kong nowadays, private wealth, asset management is promising. So not just HSBC, but there are some other international financial institutions adding headcounts in this respect to capture the opportunities.
When it goes ahead, what do you know about HSBC's plan with Hang Seng? Will it, for example, be on sale after it's privatized?
Well, this is a matter for the bank, but this has not been made to us as a plan.
Do you have any guidance from Beijing or Beijing's representatives about this process?
Well, under the one country, two systems arrangement, we operate autonomously. And the regulators for Hang Seng and HSBC is the Hong Kong Monetary Authority, and they are the supervisory body.
And you have had no contact with them about this particular deal?
Well, before they announced the deal, they let us know.
Did you think it was a way to deal with bad debts in the Hang Seng portion of the bank? Was it a good way to deal with that?
Well, in our prudent supervision of the banks, even before the privatization of Hang Seng, we do believe Hang Seng's book has fully provided for the provisions in respect of their loans to commercial-related properties.
Okay, sounds like you're on top of things. Generally on the Hong Kong economy, particularly the stock market, the Hang Seng index up 29% this year alone. I know you spoke with the U.S. Business China Council yesterday, and you said, things are stabilizing in Hong Kong.
Yep.
Just give us a little bit more about the outlook from this year into next.
Well, the financial services market is doing very well, the capital markets. As you mentioned, our stock market increased by about 18% last year, and so far this year by another 29%. And the volume, the transaction volume also went up quite a bit. From previously about $100 billion a day to now is close to about $250 billion on average daily turnover. So the volume is there. When we take a closer look of who are the investors, about half of the money are from what we call the southbound investments, capital flow from the mainland. The other half of the funds are from the international investors, Europeans, US, Middle East, and ASEAN.
What do you know about the IPO pipeline? Are you expecting it to
Very
remain
strong. Yeah, we have over 200 companies lining up for IPO, and it makes perfect commercial sense. Take CATL as an example. This is the largest IPO this year so far, not just in our market, but globally. About 90% of the proceeds from the IPO will go to their plant in Hungary. That means for mainland companies going global, using Hong Kong as a platform to raise the funds and to employ the talents to help them in their overseas expansion is a very good business proposition.
That was the Hong Kong Financial Secretary Paul Chan there speaking to Bloomberg's Vonnie Quinn. And let's take a look at which stocks are going to be focusing on, because we've got markets opening in Hong Kong and mainland China in just over 30 minutes from now. So big focus on what's happening in the rare earths area, given that China's been slapping these extra export controls on them. We have seen that mixed moves really from some of the big rare earth players in China. But yesterday you can see slipping into the close there. It will be interesting to track, given you've also seen China now blaming the US for trade tensions. We heard those comments from top officials. What else we're going to be watching is TSMC and its peers. That's certainly the focus in Taiwan. We had TSMC's earnings yesterday, an earnings beat, a second upward revision to 2025 revenue growth this year as well for the company. Overnight on Wall Street, we did see it slipping a bit, so perhaps a bit of pressure in the session today. But more ahead. This is Bloomberg.